Hi guys, welcome back to another video. Today we're going to be doing a market recap. It is currently the October 2nd. We just had a lot of things go down this week. We had Middle East conflict, we had China stimulus, and I'm going to go through basically my track record, my trades for the last couple of months or even the whole year, and then I'll go into where I think the market is going next. So first thing first, I've personally been trading for over a decade, and this video is meant to publicly share my trades for the past 4 to 5 years. Post actually remains unedited with timestamps of the edits fully intact. Sometimes I do have to edit because spelling errors and stuff, but transparency has always been my top priority. Receipts are here. You can actually click them to see like when I posted it. I have never edited any of these. So in 2022, I first predicted crypto will go to 18K. I drew this chart on my Twitter, and this Telegram channel doesn't go back that far because I had a separate one previously, but I don't think many people are calling 15 to 18K, at this price points, and I was, and I had the thesis that it was a bit overbought, and I also was still bullish in the long run, and I still expected it to go to 60K by 2024, which it did, So I also saw gold dropping to 1850 right here. If you go look through the timestamps of this date, August 30th, I can remember because I was actually trading this. It actually followed this descending wedge, and right after that, I said it will go to all-times high, which I said crypto would follow this, and it actually followed this, and gold even would go to all-time high by next year, and this was written in 2023. So in 2024, I wrote a few times that I believe gold would go to 2,600. I think I can just search right here, 2,600, and so aside from that, I also said that silver would be lagging behind. I did write how I would hedge the market. So in August lows, I said this, and you can go and check it out. But the reason I said silver's lag behind is because it normally takes about 4 to 5 months, if I remember correctly. And I did say here that I think gold would go to 3,000, 2,600. I was hyper bullish on gold. My end of the year gold target is 3 to 3.5K. And I did buy silver at 25.7 and 25.3K, targeting 32 initially, 32.9, which I wrote down quite recently. But in the long term, I still think silver can go up to $50 or $60. That may sound ludicrous now, but if equities pull back, which I think they should, silver is on a good bull run. It's been on a consolidation for, I don't know, a decade or so. So I've also traded the chop. After it went to 70K Bitcoin, I also realized that it would consolidate at the 70K area. So this was a period that I traded very, very well. If you go time it probably in the July to August period, I traded the chop perfectly. You probably can't click this link because I've changed it to realized gains instead of realized gains analysis. But if you take out the analysis, you are likely to be able to see all of these trades. If not, you can just scroll up. All of these trades are there. But I took the whole entire chop range from 70 to 63 to 48 back to this entire chop. I played it really, really well. I played almost everything correctly because I think right now we're going into something of a tightening wedge here, which is also descending, and there's a potential for it to go to 48 still. I'm not ruling that out if equities crash. I'll put that out just plainly here. And I also assessed that there was also going to be a altcoin top. So during this period is when I shorted Floki and Peppy, however you want to call it, whatever, okay? But basically I said it will drop 50%. If you go look at, I don't know, I can click this here, yeah. You go look at this, I said it would drop to in the green region, and correspondingly for Bitcoin, I think it will drop to this region. And if you look right after a couple of weeks later on, it went up to 1,000% ROI here. I was still holding, and I said I would close some here. I would still hold Floki shorts, and I finally closed the Floki shorts at here, a full 50% down. So I don't know what it's currently trading at. It's probably lower than this. I've never even checked it since then. Let's see. Yeah, it's probably slightly lower than that. So I already ate most of the profits there. Generally, you don't want to keep holding it because you have to pay funding. There's another opportunity elsewhere, and I need to utilize my capital for other opportunities, which right. right after that, I went into China back again. So China, there was a few times I bought into China. I talk about it here. You can go and click it here. The first real estate unwinding I bought, and I was also on Twitter buying this heavily. If you want to see like my Twitter account, which I don't generally share that much, but I have been a very big China Queb Baba buyer at all the $70 lows. So all three of those lows is when I bought, okay? And I bought heavily on the first one. Unfortunately, the last one I didn't buy as much. The first one I bought about 3,000 shares in total of Baba and Queb, which I think is a few hundred K. April I bought, I remember, and I think in June I bought again. June, is this me? This is probably me. Or March I probably, yeah. So generally throughout those lows in July I bought again in terms of TLT, Pinduoduo, Queb, McDonald's, Nike, even Nike at $70 I was buying. I didn't hold this for too long because I had to move the money elsewhere to do other things. But generally, my sensings of things were correct because I predicted 120 on Baba, 120 on Baba, and 750 on Neo, and 38 to 39 on Queb. I have had this same standpoint for a year already. I think it will have gone to 120, and I did say that it would take to the end of the year. So I even said that it will consolidate and only take off in October or November. It's very difficult to time the bottom, which is why most people can't do it. But yeah, in terms of analyzing resistance, we are currently at resistance. So I'm sure I wrote 120 somewhere here. Okay, but yeah, I you can just search it up. It's all there. And the same standpoint currently today on October 2nd, markets are pulling back. Equities for US are pulling back, and this probably will have some kind of contagion effect into Chinese stocks. So Baba should probably pull back today a little bit. It's not. Queb, it's probably at 38 still, yeah. But I've sold covered calls on these already. So on my resistance level, I bought them at 24, 25. I sold covered calls on 39 only a couple of days back, which I updated on the Telegram channel as well. Aside from all of this, yeah, my assessment for the current conditions is that I think US is still neutral to bearish. I can see equities pulling back further. It's been very overbought. You know, I think there's still a potential for it to correct heavily into this demand zone. Aside from that, S&P would do the corresponding retracement back to probably at least 5-1. Maybe QQQ wouldn't go as deep, but QQQ tends to be, the Nasdaq 100 tends to be a bit more volatile because it's less diversified. But I think it was still due for a pullback in terms of every kind of Bollinger Band is overbought in daily, weekly, monthly. It crossed the 5-day MA into a negative bearish territory already. In terms of gold, I still see it potentially going upside back to 3,000. I still maintain my bullish bias of 3,000. I did write that in my private channel, which I do share my trades there because these are people who have paid me to do a call. I tend to do a call at $100 per hour, so it's not anything exorbitant. I'm not trying to sell an exorbitant cost. I'm just trying to share my knowledge. But I have shared my positions here generally. And in terms of gold, I still see the upside target of 3,050 to 3,200. I will assess it when the day comes, but in terms of extension models, I think this is entirely a possibility if equities drop. So moving on to what is happening in the world right now. We're in a very iffy spot because a lot of it depends on what happens with the Middle East. And I did share this today about this thing called the Strategic Petroleum Reserve. During the Biden-Harris administration, they depleted these oil reserves down quite a fair bit to all-time lows. And people might be saying, hey, they sold it at $90. You know, Trump bought it at $30, by the way, during his term. And then they sold it at $90. But you tend not to be supposed to speculate on these petroleum reserves because they're meant for a rainy day and a crisis period, okay? And this makes me bullish on oil, and aside from other factors like China having to buy oil because they are also trying to stimulate. So commodities in general would rise, you know? And what's happening in the Middle East right now is also part and parcel to play with this because the only reason that the Middle East conflict is allowed to go on is because they took away the Iranian sanctions. So I think I wrote that somewhere here. But because they took away the Iranian sanctions of oil, they're able to sell their oil, and that is able to fund this Middle East conflict. And the Middle East is where the OPEC is done. So yeah, it's pretty horrific right now with what's going on there. There's literally this dude that just got smashed by a booster rocket. And yeah, it's really unfortunate to see that happening in the rest of the world. But on the standpoint of trading, I think this would be bullish for oil. I hope peace comes along, but I think that from what I talked about on some of my live streams, I think that we're entering a season of conflict. Normally during elections, normally when there's a lot of wealth divide, every 10 to 12 years when market cycles boom and bust, there tends to be a change of guards and people starting to fight. So they will fight for resources. You know, this happened 10, 12 years back in 2012 in Occupy Wall Street and the 08 financial crisis. You go back another 10 years about there, you have the dot-com bubble, and you have a lot of, you have 9/11. All of these conflicts tend to be boom and bust cycles. It's something that George Soros said about it in New World Order. And every 100 years, there's the banner cycle and all these kind of things that show that there are periods of easing and periods of tightening, and the people who benefit from the easing will fight the people who are pissed off with the tightening. I think we're born into a generation where, unfortunately, if you're starting out from scratch right now, you don't have the benefit of having inflation work in your favor. Because if you're a boomer, you know, they say you can buy a house with 7 raspberries. It's not the case right now. You know, we look back into what's happening with China. We had few consecutive rounds of stimulus. If I remember offhand, the PBOC said directly that if 500 billion is not enough, we can do another 500 billion. And this was a sign that this was completely bullish already at this point. So it's been a few consecutive days in a row of 10% gains on an equity index in the Hang Seng, China A50 and your internet ETFs and whatnot. But the reason why it's also going up is because I think this was the second most popular trade. The long Max 7 was the most crowded trade. It means most people took this trade. And generally when people take the trade, yeah, you follow the momentum. But when it unwinds pretty fast. So it's generally not wise to short an ETF, okay? Because markets are tuned to go up. Inflation is needed in most governments to devalue their debt and to debase the system. But in terms of short China equities, because so many people short it, they would have to cover their short positions. It's something like what happened with GameStop in the past. Once the spot people would have to buy, the derivative players would have to unwind their positions, and that would force them to take the buys. And in general, that would cause a short squeeze upwards or a liquidation cascade upwards in terms of that. And if you go look at how China has ran, Alibaba is one of the most worth investments at the bottom. It was like $7 or $8 or $9 PE ratio. Yeah, they have a big fan base. It's very cute. They have chants. It's a very big thing in China. But if you want to compare that to the US, you know, you look at Wingstop, for example. Wingstop was one of the most overvalued companies at 140 PE ratio or something like that. It's been a non-stop rise, you know, and if you look at Nvidia or Tesla, they were like 40, 90 or whatever PE ratios, forward PEs. And I'm not saying it can't go up anymore, but you know, when things are so overvalued, they must come down to earth eventually. There's gravity, and you're saying that this is 100 times price to earnings ratio means that they have to take 100 years of earnings to validate their price points. And these are kind of frothy periods, you know. It's like the roaring 20s every 100 years, you know. You watch the show The Great Gatsby. It's kind of saying that every 100 years there is conflict. And what happened after 1920s? After the roaring 20s, we had the Great Depression. Obviously, you can't time these kind of things because they take 5 to 10 years. And the difference is that nowadays cycles tend to happen faster. But they also can prolong the deficit by printing more money longer. These are a bit more financial jargons, but if you can understand what I'm saying, then basically I'm saying that US is still overbought, China is still undervalued. And I still see the upside to China, but I think that we are currently, the day I'm talking right now, October 2nd, we're currently at resistance level. Yes, it can squeeze up further, but I think it's wise to at least take profit on levered positions, which is what I was doing, because You can't hold futures leverage for long because of funding rates. You can't hold CFDs leverage for long because of swap overnight rates and holding costs. And so if you're holding levered positions, I would say take profit. But if you're holding spot, there's no reason to take profit here. In terms of other price of other assets, I think Bitcoin can still retrace back to 59, 58. It's quite a real possibility here, easily. I would be a heavy buyer at this region, but I'm not confident it will go there anymore. This will only be required on equities unwinding, which actually I think there's a possibility too. So I'll update that as it comes along. If you want to know my live updates, I have a private Telegram channel. We have a community chat where I sometimes talk about things. Yeah. A very brain dead play will still be, of course, TLT. I think long bonds are still the play because if we are going into a rate cut cycle and we're going back to the neutral rate of $4 interest rate, right? The Fed funds rate is now 5.5 dropped to 5. The dot plot is pricing it at about 2 more 50 basis point rate cuts for the rest of the year. So that'll bring us to 4, from 5.5 to 4. Below that, we can still go back to zero interest rate policies, which I talk about is called ZERP. That would be only if the equities market collapse and people are calling for the Feds to bail them out. It's best not to listen to what they say. Okay, today we have a lot of speakers talking, but in 2007 and 2000, they also said we're going to time towards a soft landing, and that clearly didn't happen. I did the research on that in terms of my newsletter a week back, but this is very eerily familiar to the 07 and 2000 crisis. Right before that, of course, equities still ran up, so I'm not saying S&P can't go to 600, but I think US is primed for a bear market soon. And that might be unpopular to some of you to hear, but I've always stand on the notion that rate cuts are bearish, and the yield curve uninversion is something I can't ignore. In some sense, we could still see a center cross rally into the 600s, but October 9 is a very pivotal day for a drop, I think, because it's 2 weeks after the FOMC meeting, and that's when their minutes normally come about. On both 01 and 07, the S&P dropped after the October date for the next 1 year, but I'm not saying we're there yet. We're pretty close. So yeah, minutes are released 3 weeks from the meeting. I stand corrected. So yeah, I can look at the history of things. I'm not saying history is any indicator of what's going to happen, but it's a good way to not be in an echo chamber, to have some differing opinions. Aside from that, it's also good to learn about history. So anyway, that comes to the end of my live stream session. I've been actually yapping non-stop. But if you like this sort of content, do remember to like, share, and subscribe. I'll see you guys next time. Remember to follow my Telegram channel, my new Instagram. Everything's on this website here. The social links are there. And I hope you learned something from this. See you. Bye.